Where's Santa? Will he remain missing in action until the holiday? What's up, everybody? Welcome aboard Bubba's Bottom Line, and always great to be here with you. And that Santa Claus rally seems farther and farther away. It just doesn't seem like Santa wants to make an appearance this year, or was he early? Did he come in through the views of not Ben Bernanke, but Chairman Powell when he went from dovish or bearish to hawkish to dovish, and all after the pressure from the president? And I guess the real question is, was it really pressure from the president, or was it really that maybe the economy, maybe things aren't as good as we think they are? I don't really have the answer, but again, it should bring the question to you: why is the Fed all of a sudden becoming soft? And why are the markets not reacting better as they have done in the past? And the question, the answer would be, well, maybe there are some underlying problems which we have talked about here repeatedly. And just to remind you, we have massive amounts of debt, which do not bode well for the near future. We have major problems with everything that is going on, and yet we can't seem to get past it. And I think this is where when you look at the credit card, margin, student, and other types of debt out there, all of that is not only is it debt, but it is bad debt. You have emerging markets that are still collapsing. You still have all of the other issues. You've got what's going on with Brexit and the EU, which looks like it's ready to come down. So it looks to me like the house of cards is getting ready to tumble. Now, from a long-term perspective, if I were a long-term investor, which I am, but I'm also hedged. But if I was a long-term investor, I wouldn't be, as concerned, because I would understand that markets are not going to go straight up forever. But from the short term and from the fear mongers, you will start to get blasted by the world is coming to an end and it will never be the same and all of that BS. Okay. But at the end of the day, we are due, okay, for some kind of adjustment here. Again, you cannot continue to go straight in one direction, no matter how bullish the pundits and the advisors want to be. You cannot continue to see that these markets are going to go straight to the moon. There has to be some sort of a pullback, and I think this is probably just the start. And I think it's going to be a rather nasty one as we go forward. But as we look forward, again, we have to remember the overall cycles that go through, okay? And right now we're going into more of a negative cycle. We're coming out of the election. We've got the Mueller probe still overweighting the market. And of course, now that he has supposedly, and again, this is only stuff that I've seen, but he has scrubbed Strzok's text messages, okay? Again, the great FBI agent who told Lisa Page that he would take care of Trump if something, you know what I mean? So it doesn't, there is a lot of issues out there, and none bigger than if wages are rising, okay, and companies are going to have to pay a bigger payroll. Everybody tells me that the advisors and the economists have priced that in. But let's look at this way. When was the last time some of the big time advisors and some of the big time economists were right? I don't know about you, but I can't remember. Okay, because again, this all ties into the idiocy of the Federal Reserve, who has no clue as to what's going to happen next, and they won't tell us that there's a problem until 10 years from now. Now, that does not do you or me any good if they don't tell me till 10 years from now that there's a problem. Okay, so we've got the Fed meeting this week, and of course, they're going to hike the rate. There's talk that maybe they won't. I will bet on it that they will. And of course, I think what you will see from there is nothing. And I think that if they don't hike the rate, where most would think that might be bullish, I think that might send the market into a tailspin. Because again, markets are markets and they trade. And what's going to happen here is if they do hold back on hiking the rates, that would signal to everybody that there's some real big problems underneath the surface. So companies are going to make less profit because they're going to have higher wages and they're going to have also higher interest. And again, we can talk about the difference in why the Fed won't raise and the stories, but let's remember, okay, the bond market is the biggest market in the world by at least 10 times, if not bigger. And that's fixed income, and that goes across. That's from the U.S., from the 2s to the 10s to the 30s to the bond, the booble, the shot, and every other bond throughout. Now, there's going to be, and what always happens is the bond traders are going to start to take over here and force rates up. They've already done so over the last year and kind of forced the Fed's hand. And of course, this is going to continue. We have seen for months how the Fed has tried to pressure the dollar and keep the pressure on the dollar, keeping it low. Well, guess what? The dollar's breaking out, and it's going to continue to break out because it certainly looks like it's going to at least par, okay, if not farther. Now, again, I think that's fine. That's an okay thing. The biggest thing we want to make sure is that we just allow the free markets to trade and let them go. Then if the dollar goes to 80, fine. If it goes to par, great. It doesn't matter. It should not matter, and it will not have such a major effect on everything else that we are talking about. We all want to make an excuse about the dollar. You hear the companies, Caterpillar and all these, oh, well, the dollar's too strong. Well, hedge the dollar, then you don't have to worry about such a strong dollar. But, I think one of the things we have to look at is, although we've heard about the great tax cuts, and again, it was nice to see some of it, but, again, a lot of Americans did not receive a pay increase in 2018. Okay, some did get some small bonuses, but we need some more consistent income. And of course, that will come in time, but we're in this transition period from, where wages were really depressed to now we're getting a little bit of a boost. And I think what will happen, as what always happens, is it'll have to go the other side because there is not enough employees, not enough people to fill the jobs that are out there, and companies are going to have to continue to pay more. You've already seen the tip of the hand when Amazon went to $15 and other companies, and these were not government mandated, which makes them true supply and demand reasons that they have to raise wages. So you're going to start to see this is going to cover and go to eat into a lot of the profits of these companies. So you can think, and we can hear them predict, we can hear these wonderful economists who couldn't find their ass with their elbow, but I think that you're going to see that at the end that this is all going to play out to be somewhat negative. Now again, we don't want you to believe that we think that the markets are going to collapse and can never go up again, nor that we're going to be destroyed. This is going to be a normal cycle where we're going to see some problems. And the real thing here is that the Federal Reserve creates all this. Okay, if we would let the markets always free trade and let true price discovery happen, we wouldn't have these major boom and bust cycles. We would have cycles, but they wouldn't be as dramatic because, again, you have pumped this up, and we go through the 7 phases, okay, of the cycle, okay, which is the financial. We get the optimism when the markets start to rally, and of course you get the acceleration of the rally. Okay, so we had the optimism starting back years ago, and we got some of the acceleration, and then you had we've had some euphoria, all right, and all of a sudden, out of nowhere, we start to see some things that are starting to change, a little bit of financial distress. We're seeing some things start to change around the neighborhood. We're starting to see some things happen globally. We saw first the emerging markets collapse. Then we saw some of the bigger markets collapse. Then you saw China start to collapse. And of course, you want to mix in the trade wars. I don't think they have anything to do with it, okay? Again, I will continue to stay on my bandwagon that the trade wars are nothing, but there'll be more about that later. And then, of course, you have the market starts to reverse. Well, we saw first in January, we saw a reversal. And then by March, everything was okay. Well, here we are back again in October and in December, October, November, and December, and things are not so good, and markets are under pressure. And we're looking for Santa Claus, and we can't seem to find him, okay, for the Santa rally. Now, he may show up. it's an interesting week in which he may show up because you've got the triple witching cycle expiration, which tends to be many, many times a bullish expiration. And you've got the end of the year. So you might see some buying, plus the fact that the markets last week closed on kind of the bottom end of a support level. Okay. So now you've got, the market's reverse, and then we start to go lower. And now a little bit of the fear starts to play out in the market, because all of a sudden, everybody who was looking at their 401ks every day, oh, this is good. I'm making money. Ooh, this is good. All of a sudden, they're not going up so fast. And in fact, not only are they not going up, they're starting to go down. And you're starting to see in a market many more new lows than you are seeing new highs. You are seeing a lot of signs, okay? So we haven't got to the panic part yet. We're right now in the part where there's some distress, and to quote the Duke brothers, okay, that can't be right. How can it be going down here? Everybody tells me that I should be buying the dip. This can't be right. Well, that, of course, is always right, because what do we know for sure? The markets are always right. So you'll look for it, and I think now, from trying to be a positive to this market with their silly monetary policy, okay, they may become the black swan here, because again, every action that they take, and there's just the simple fact that they changed their tune, and although the original reaction to that move was a 600-point rally, I think this is telling you that there's a lot more issues to deal with. Add into that risk of recession looks to be about 35 to 50% right now coming up. I think that also then creates some other issues that nobody wants to take a look at. So I think that these things, debt, costs, interest rates, all these things lead to something that could be extremely ugly. And of course, as we've talked about for months, we thought that higher interest rates along with the higher dollar could create the event that would cause eventually the big sell-off. And we don't think we're so far away from that right now. But in the meantime, this is Bubba's Bottom Line. I am Todd Bubba Horwitz. It's always great to be with you. And of course, don't forget, if you'd like to get the free book from our friend Adam Barata, Gold is a Better Way, go to bubbaTrading.com/gold. And of course, if you'd like to help us with our high school program, all you have to do is go to Patreon, patreon.com/Bubba Trading. And of course, that's patreon.com/Bubba Trading. And we're going to get back to Bubba's Bottom Line right now. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you, and we just got back from Vegas, had a great time at our seminar, learned a lot, had a lot of fun, and I tell you, I'm getting too old to be traveling overnight. But of course, the markets last week were extremely volatile, and I think that, of course, as volatility comes in, I think this is one thing. Before anybody gets nervous about the volatility, I think you should embrace volatility if you're an active trader, because active traders thrive and love volatility. If you're an investor, again, if you're an investor and you're not going to puke out either because you're hedged or because you're smart enough to know that the markets most likely will make a return rally, maybe not tomorrow, maybe not next month, maybe not next year. But again, over time, the markets do rally 8% year over year. I think you might say, maybe I should turn off my phone for a while. Maybe I should quit looking at my 401k or my IRA or my investing account every single day. Because again, it doesn't do you any good. It really creates more of the panic and puke, which ties back into what some of our topics for the last couple of weeks, which is the high frequency trading. Individual investors create the high frequency algorithm trading because they get nervous and they start to panic and puke. But in the meantime, very volatile last week with another down week. And of course, we get smashed on Friday and we closed right down on major support levels across the board. Now, we have been in this big sweeping consolidation pattern for about the last 10 weeks. And again, we could bounce from here. It would not be a total shock. I certainly would not want to be a seller of the markets here. Okay, I'm already short, but I wouldn't want to sell into this here. I firmly expect to see a rally, which we would want to then sell into that rally, which is what I'm looking for. Again, you do have the Fed this week. You do have a triple witching expiration cycle. So there's no reason to be overly aggressive into the short side here. In fact, you may want to look at it as a spot if you're a very quick short-term trader looking for a bounce. Okay, but what I see here is that the S&P, the Dow, the Nasdaq, and the Russell are all in trouble, and they're all right. They could go either way from here. They've all kind of broken out to the downside. But, again, one day does not make a breakout, does not violate a pattern. So they could go a little bit lower and still come back with a bounce. But we would look to see, we're going to look to be a seller of the rallies that are going to come from these. And again, this is the pattern we are in. We were in, for years, we were buy the dip. We have now switched over to sell the rally. We are in a bear market. We're going much lower. And I would not be surprised to see next year or in the next, let's say, 2 years, that we're going to drop 35 to 40% from this market. Again, I still have a target that has not been hit of 1562 in the S&P. So you can do the percentage work on there. In the meantime, we continue to talk about the trade wars and the effect that it has on grain markets, and everybody gets up there and talks about, oh my God, what's going on? The trade wars, Well, I can tell you this, okay? The prices in grains have been moved up, and it could possibly be, especially in soybeans, which seems to be the topic of the crop of topic, that maybe we just have too much supply. Okay, maybe the years of production have been just so big that we don't have enough to sell. There's been a lot of stuff that's been exported to unknown societies. In the meantime, soybeans are about 70 cents off of their bottom, and they actually were 1 point last week, about $1, and I think they go higher. We identified long before the trade wars were even in the dream of anybody, we had identified that soybeans were in trouble anyways. So I don't think it should be any surprise. You see corn moving its way back up. You have wheat moving their way back up. So I don't see any reason, again, that this becomes back down to the trade wars. I think when you look at what else is going on, if you take a look at the meats have been relatively strong. I think when you look at pretty much across the board, I mean, hogs closed a little bit lower for the week, but closed right on some support, but they have been moving up. They're still up 15 or 20% from their lows. You've got fat cattle or live cattle has broken out a little bit. So, that should be ready to make a high, and feeders came right down to a level we were looking for and is moving. So again, I don't see anything that really makes me afraid to be concerned about here. I think we look for better prices. Gold, look, it broke out and then it came back. It closed a little bit below our key level. But again, remember, you can't pinpoint. We are not trying to trade with a scalpel. Okay, you have to have a range. So if I say 1240 is support and it goes to 1235 or 1236, that's still within range. Okay, I'm not going to puke out my gold. I'm still looking for opportunities and spots to buy gold. So I don't see it as a major catastrophe. It went a little farther than we thought, but it's not falling apart here yet. So we have to continue to watch and observe there. Oil, again, as we say, I think it's going a lot lower still. You've got the crooks from OPEC, trying to figure it out. Now, if you don't think that they're not overloading and pumping out like crazy right now, you better think again. But we go back to this big argument that everybody wants to make. Well, the shale producers, let's see, when we were at 60, well, the shale producers and the frackers, they need to get 60 or they're going to be out of business. And then it was they need to get 55 or they're going to be out of business. Well, now we're at 50, and guess what? There's more rig counts. They're adding rigs, which means they want to take more out of the ground. So does that mean that 50 is not the level either? That maybe it's 45? I understand, and I don't know. This is strictly what I hear, but I understand the actual real production cost for most is in the 30s. Now, it doesn't mean that some of the smaller guys aren't over leveraged to debt, but as a general figure, it's somewhere in the 30s. And I would not be surprised to see oil move into the high 40s for sure, if not at some point next year, the high 30s. And again, everybody says, well, oh, that's so bearish to the market. Well, I think we were we had a lot of growth going on when oil was $19. I don't see yet the correlation between oil and the overall growth in the economy. I think that actually cheaper oil stimulates the economy because you get cheaper gas. Okay, so a guy who's making 50 grand a year doing a lot of driving, and he's now going to save $1,000 or $1,500 a year because of the lower gas prices. I don't know. I think you can make a case for either way. I think this is what goes back to that academia economists that don't really understand what a budget is. I mean, certainly we know that our government doesn't know what a budget is, okay, because they just keep printing more money and keep going deeper and deeper in debt. So it's hard for me to put a lot of faith into an organization that is over leveraged with the Fed or the government that is so far in debt that they'll never get out. I mean, never see the light of day. So, you know, it's a shame, but that I think is the issues that was here. And of course, the dollar broke out, okay, to higher highs again here and big numbers here, and I think that continues. Okay, again, we have since the dollar was 88, we have been calling for par, which is $1, and I think that the euro currency is going to collapse. So again, I think the whole eurozone is going to the toilet. Okay, and again, this whole act of trying to get to some socialism is becoming the problem. But again, I think you can look for the dollar to continue stronger. I think you can look for interest rates to go higher, and I think these are things that we're going to see going forward. And then, of course, the cryptocurrencies have been in a little bit of a muck. Now, again, is it because they are really no good? Is it because that the pattern is more similar to what happened to the NASDAQ in the 90s? Okay, because I believe, that the cryptocurrencies are real. I believe that the cryptocurrencies are the internet of the 90s, and I think it's just a new technology. But unlike the internet, who's pushing the hardest against the cryptocurrencies is the Federal Reserve and the banks. Now, I would bet, and I have no evidence of this, but I would bet the big banks have huge holdings of cryptocurrencies. I don't know, but I would bet that they do, because they know it's going to get through. Because again, that takes us back to a true free and fair market, okay, where free trade and true price discovery, because I can go trade right now my cryptos, okay, and I can buy or sell right now without having to wait, and nobody can control the value other than those who buy it and sell it. So again, you go back into that buying and selling mode where you get true price discovery. So again, as I've said, and I will repeat, I'm losing money, but I'm not over in where I'm concerned about the money. Again, to me, this was just simply, I'm trying to hit a lottery ticket. But I do think that we're going to see some growth, and I do expect to see some sort of a rally here. So as we move forward into what we would say the final, to me, this week is the final trading week of the year. Okay, it's up to the big expiration. It's the Fed, because I think after next week, first of all, remember you've got 2 short weeks, because you've got Christmas Eve on Monday, you've got Christmas Day on Tuesday, and New Year's Eve at the following Monday. So to me, that says that this is it for the year. And again, it doesn't mean I'm selling everything to get out. I mean, obviously we'll carry positions, but if there's going to be any action, and if Santa Claus is going to show up, it's going to be this week. If he does show up, I think he's going to show up with a lot of coal in his stocking, and I think you want to look to be a seller of these rallies, because I don't see any reason that we're going to see a big move up. You look at the yield curve that's continuing to flatten. The banks have been getting hammered, and that is not a good sign. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to stop out here for our last break and come back with, of course, my commentary. Hey, everybody. Listen, if you want to help us with our high school program, please do. Go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And, of course, if you want to get the free book from our friend Adam Barata, Gold is a Better Way, just go to BubbaTrading.com/gold. And you can get your copy. Great book, great guest, and we're going to have Adam on in a couple of weeks. In the meantime, let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. And, of course, each and every week I get to put out my commentary. And, like it or not, you get to listen to me if you choose. But in the meantime, as I mentioned, I just came back from Vegas. And I got to say, to me, I look at these convention centers, and I can't believe how much and how they are allowed to rip off the American public when you are a captive audience. I look at this situation, and I just got to give you a couple examples. Okay, to me, it's really criminal at the numbers they charge. I had a couple of small boxes shipped to me to Las Vegas, and I had to pay $50 a box to get them. Okay, so the shipping and the fee that they charged me to stand there for something I shipped to myself, okay, cost me more than what was in the box. Okay, I needed some power strips. Okay, I needed some power in the room we were doing the seminar in, and they wanted to rent me for $20 a day per power strip, $20 a day for a power strip. Now you got to tell me, is this ridiculous or what? It's not enough that you come into their hotel and bring in guests to their hotel. It's not enough that you bring in people that are going to their restaurants and buying their food. It's not enough that they charge you, and I have no problem with paying. Okay, again, I understand costs, and I understand paying above scale a little bit, but what I don't understand is why, for example, an audio-visual slide camera, that you would use like for a slideshow or whatever, that they want to rent it to me daily for more than I could buy the whole camera myself for. And I don't understand how this became so totally acceptable. I remember all of the union things, and I remember, if you were in a convention center and you had to move something from one spot to another, you had to get a union employee to do that for you so they could charge you $200 to do that. To me, all of this is so illogical and so much of a rip that I don't understand how we, as even the customers, because again, that business, like any other business, is a supply and demand business. And if they start losing some of their business, but of course, unfortunately, we continue to pay it, and it allows them to continue to charge it. But I find that to be offensive that they look you in the eye and they just suck your eyeballs out, and without even a thought of anything. But all they care about is how much they can rip you off for in that period of time that you're there. And there is not one thing that they don't hammer you on. Okay, and it's funny. Just a side note, that when you buy food from them, which we did, okay, they want to get it out of the room as fast as they can, and only to throw it away when you say, hey, well, why don't you just leave it be? So if the people want to have some, they can enjoy it. No, it's got to go. And again, so I find that experience, and I've done many of shows before, but it continues to get worse, and they're raising themselves and just, again, punishing everybody while they reap huge profits, not only with everything that they charge, but then you add into the hotels the brand new, well, not brand new, it's like old now, but the resort fee, okay, for $37 a day, okay, so that you can get Wi-Fi that costs them nothing, and so you can maybe do something else there. So I think we've lost touch. I think there's a big issue there. Now again, I'm not going to be the one that changes it because I'm only one man, but I do believe that it will be at some point another reason that a lot of things will start to change in this country, because they're just basically robbing you blind. In the meantime, this is Bubba's Bottom Line, and of course it is a football Sunday. A lot of football coming to the end here. The Sunday night game, Pittsburgh against New England. Oh, what a tough game this is. We're going to go just for a small little pizza and a beer. We're going to go with the Pittsburgh Steelers at home in basically more of a must-win for them than it is for New England. In the meantime, everybody have a great rest of your Sunday. We'll see you back here tomorrow with Bubba's Daily Update. Have a great day, everybody. Thanks so much. We'll see you later.